This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Tuesday morning from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. And today may be the day that at least on the Nifty Bank, we bridge that 10 paisa gap which was left between where we were at the day's high and the all-time high.
I don't know if it really matters because the momentum is back, the energy is back, and we're virtually at all-time highs. So I think you can sense that kind of energy, right? I got a message from Sanjeev Bhasin, by the way, last evening saying that, get ready because I said that 18,500
by the 15th of May.
by the 15th of May, and we're almost there virtually.
I mean, it was a fantastic call, and I think you got that absolutely right.
And did he follow it up with the dance that you have to do after that?
I think that's coming.
I'll tell you what, guys, he's here on the 19th of this month. The closing bell, though, Sonia, so you better stay back and, we'll do that, the Bhangra, right? Anyway, I mean, the markets are doing their own thing, and it's a dance out there. Momentum is very, very strong. So, I mean, strong bull momentum. That's basically what we have, and new highs are in sight. Global cues are supportive as well, and I think that is a good thing. I mean, it's not as if, global markets are going one way, other markets are going another. Nasdaq is up about 0.6%. It's actually stunning, right? I mean, after all that has been said and done, I mean, predictions of tech seeing a big slowdown, etc. Nasdaq, year to date, in 2023 so far, is up 22%. In 2022, it went up 25%. In 2021, that was a 27% return. 27, 25, and 23. I mean, that's not bad at all. It looks like a normal year for some of the largest stocks in the world. The dollar index, that overnight was down about 0.25%. So that's the one risk aspect that many have been pointing to. That, and these are sort of, people who've been there, seen cycles. They're saying, well, ignore all this trash talk about the dollar. The end of the dollar regime will come one day, but today is not that day. And the dollar perhaps is more upside than downside from here, but we'll see. Overnight, it was down about 0.25% or so. Later today, we get the US retail sales data, and that is important simply because it gives you a very comprehensive picture about the health of the US consumer and whether the US consumer wants to spend, save, and what else. It's a very sort of a real picture, and that will be very closely watched. Let's come to the market here, right? I mean, what needs to be said except the fact that we are close to record highs, a new all-time high on the Bank Nifty, perhaps with the help of the open, is likely. We got there. I mean, it's for all practical purposes, we got to the all-time high yesterday. The closing was a record in any case, and maybe we'll be past those levels. Support for the Nifty Bank comes in at the 20-day moving average. There are some hourly averages, like the 40 hourly exponential moving average, which lie between 42,980 and where we left off. But the big one is the 20-day, which comes in at 42,980. The Nifty tested the 78.6% retracement, which is 18,450, but failed to close above it. Remember, in the last 30 minutes, the market got a little nervous and it came off a little bit, but it was not a big, huge sell-off or anything of that sort. Support for the Nifty at the lower end of the rising channel comes in at 18,296. 18,296 is where the support on the index comes in. It's a rising channel, so those levels also on the downside keep moving higher. I mean, the rule of momentum, the rule of technical analysis is you buy strength, and the market is looking strong. It's looking in a fairly strong zone. And it's not even by the dips, right? For example, yesterday the Nifty started with a 30-point gap. There was no dip, and then the market kept on moving. So are we in that kind of a phase? I think the next couple of days will tell us that. The starting is indicative on the SGX at least above that 18,450 level straight off the bat. Sonia.
Oh, absolutely. And, as you rightly pointed out, it's the momentum that has come back to the market. And generally, when the market starts to move with this kind of a gusto, then there is that FOMO feeling. So the rest of, the retail fraternity sort of starts to jump in. Does that happen now? Of course, time will tell. Today looks like it's going to be a very, very strong start. Remember, a lot of milestones have already been hit. So the Nifty is at a 5-month high. It's broken the upper end of that trading range. That 18,300 mark was a firm resistance for a while, and that has now been taken out. The Nifty Bank is near a lifetime high as well. Now, rate sensitive, we've been talking about this for a while. the narrative in the market is that at some point monetary loosening will begin. And when that happens, rate sensitives will benefit. And we're already seeing a lot of it get priced in. Realty, autos, banks have seen big buying. Auto stocks like Tata Motors were big gainers yesterday as well. You saw DLF too. And momentum is on the upside even in terms of flows. So both FIs and DIs bought in the cash markets yesterday. Almost 2,000 crores, about 1,700 crores of buying coming in from FIIs. The US markets didn't do much. There is, some wait and watch before, some key announcements coming from Janet Yellen. There is a bit of concern about the banking sector in the US. So all of that put together put the US markets in a bit of a wait and watch mode. But our own markets have definitely decoupled from its global peers. Good results that have come in the last 24 hours from a lot of the consumption companies, whether it's something like a Berger Paints, where Q4 was pretty strong for them, volume growth of 11%, double-digit revenue growth as well. So that entire space could be in focus. And in terms of earnings today, you have names like Bharti Airtel, Bank of Baroda, IOC, JSPL that will be reporting their earnings. By the way, FIIs have now been buying in the cash markets for 13 straight days. So definitely that confidence is back into the markets. Whether we can build on to these gains, it seems like we can.
Sonia, the first sight that I had this morning when I came to work was our dress team running to get Sonia a green jacket. That was the first sight. It
wasn't planned.
So maybe, in fact, the color as well could be green for the day itself. And the Nifty Bank, well, that's been in absolutely cracking form. That's the index that's really driving these markets higher. But just a quick word on the broader markets. I recall at the start of April, I'd said that there is plenty of opportunities out there to go ahead, buy better quality names trading at decent valuations. But I think just in some stocks now, just be a little mindful and be a little watchful, because you have quite a few stocks that are flying off the shelf. So maybe it's a good time to get in some quality names as well as cleanse your portfolio as well a little bit. That's in terms of the broader markets. Two big triggers for me. Today, the Nifty IT index, that could be in focus. The Nasdaq was the outperformer. So can the Nifty IT index perform? The second factor is going to be the Nifty Financial Services Index. That plays out the weekly expiry. So let's take the first point first. We're talking about the Nifty coming off 50 points from yesterday's high. That's because the Nifty IT index gave up a goodish bit. The large cap IT names, well, they slipped a little bit, and that's what put pressure on the Nifty itself. The intraday chart will tell you the picture perfectly. That's the one. But the Nifty banking index, well, that continued to hold its ground. And that's where strength is on, in the Indian markets itself. So that pretty much held on to what we saw. Moving to the FI data, well, yesterday they added some long positions, close to around 10,000 long contracts. And now the short positioning is holding at around 50%. So they unbound some shorts as well, or covered some shorts. On the writing side, well, the put writing is something that's heartening. And that's what's holding the bulls in good stead. Yesterday as well, they wrote way more puts in comparison to calls. And the 18,400, 18,350, between them, they added more than 70 lakh shares. You look at those strikes and you deduct the premiums. That's what will give you a bit of a support zone. 18,300, 18,350. That's going to be the important support zone. And in fact, we'll be in an uptrend, till those levels hold out in the near term. Resistance, though, comes in at around 18,550. And I say that because on the call side, 18,500 call has the highest open interest. The premium out there is around 50 rupees. So that's why 18,550, that becomes the next resistance zone. But it's the Nifty Financial Services Index, which plays out its expiry. And normally we don't see, so much of activity on a particular strike. But yesterday, the 19,600 call, open interest was up by more than 20 lakh shares. The premium is around 50 rupees approximately. So we need to get past that congestion zone on the Nifty Financial Services Index. That's 19,650 to around 19,700. Yesterday, we went closer to that vicinity, but we did see some bit of a pullback from those levels. So just keep an eye out on that index. Remember, the Financial Services Index has other names like the Bajaj Finances of the world. HDFC Limited has close to around a fourth of the weightage out there. SGX Nifty suggests a gap up. We need to hold on to this gap up and breach yesterday's high. Let's see how this one goes.
All right. It's green, right? It's
guys,
all,
it doesn't work like that. Trust me.
It definitely doesn't work, but just some indication.
It's all planned. All right. Well, before we go any further, let me quickly tell you what's lined up over the first half hour of the show. We will get you updates from markets across the globe. Dean Kim of William O'Neill and Company will join in to discuss the global setup. Our research team will bring you CNBC TV 18's list of top 10 stocks for the day. At 8:30 in the morning, we'll do a fundamental stock check with Hemang Jani of Motilal Oswal Financial Services.
Okay, with the bulls right on top, we have a lot of market commentary flowing in. It generally is the case when the market starts to move up. Sanjay Mukim of JP Morgan says the outcome of the recent Karnataka elections with the loss of the ruling BJP is unlikely to affect Indian equities directly, but could suggest the upcoming Delhi elections will need to be hard fought. He says political temperatures on Indian media will rise, likely affecting market sentiment marginally, while investors might worry about any near-term resource reallocation away from capex. He says industrials and financials have tended to do well ahead of the elections. He doesn't think this election cycle will dent the expected mass consumption recovery, and they like two-wheelers and staples. Banks remain their key overweight sector in India.
Okay, CLSA's Lawrence Blanco says key global and regional equity indices continue to give conflicting messages. The S&P 500, the Nasdaq 100, the Nikkei and the Nifty remain resilient and are holding around the upper boundaries of their multi-month trading ranges, while on the other hand, the Hong Kong, China markets and US cyclical sectors like transportation and metals and mining are trading at the lower boundaries of their multi-month ranges. The base case is that this environment is one to manage risk rather than add risk. He adds that the current technical setup warns of a 5 to 10% correction. Lawrence, remember, was on the channel recently pretty much saying the same thing.
Okay, well, let's also get you some money market views on how the rupee could shape up. Abhishek Goenka of IFA Global says the rupee faced pressure last week due to the RBI's continuous buying and creating a cash dollar shortage and reducing the incentive for exporters to hedge aggressively. In the short term, the dollar INR pair is expected to have a bullish bias, eventually aligning with favorable macro and balance of payments dynamics. The April trade deficit was lower than expected, and FY24 is expected to have a more favorable current account deficit and balance of payment dynamics in FY23. He expects the dollar INR pair trade within the 81.60 to 82.90 range over the next few weeks, with a risk of a downside breakout.
On bonds, Ajay Magnolia of JM Financial says that after the inflation print being lower than expected, it is likely to moderate further in the coming months. In the absence of domestic or global triggers, stability in crude and US Treasury yields will help yields, which are likely to remain in a narrow range. However, systemic liquidity continues to be tighter, which might have an impact on shorter end of the curve. He's expecting some profit booking at current levels. He expects the 10-year benchmark yield to trade between 6.98 to 7.03. That's the range for the day, according to him.
Well, a lot of result reactions, a lot of stocks in focus as well, and we'll get to that list in just a bit. But for the time being, let's run you through the list in our special top 10 segment. We're looking at Berger Paints, Astral, PVR, PCBL, Vesuvius India, Home First Finance, Hriday, Small Finance Bank, ONGC and Oil India. Their stocks on the back of positive news flow. While on the flip side, you have Coromandel International. That's the only stock that could potentially react to negative news flow.